Hello everyone, just want to give a bit of some insight into what's going through my mind as I'm preparing for the trading day, and just using this as an example. We obviously had a lot of action in the market on Friday, so heading into today, a lot of questions is how to play it, what's going on. So I wake up and pretty much for an hour before the market opens, I'm going over everything, a lot of individual names. I'm looking at the daily setups. I'm looking at key support and resistance levels, and I'm making note of all of those. I'm writing them all down on a whiteboard for members, but as I'm doing that, it's ingraining that into my head and my memory as well. So a lot of times I'll know these key levels off the top of my head before even having to reference anything, and that really just gets me prepared overall. But heading into today, the key thing was, can the bulls hold the low of Friday? If they can hold the low of Friday, we know that they put a stop to the bleeding and that they see some follow through in terms of a short-term bounce at the very least. So that is step number one. Can we hold the low of Friday? So I'm making note of every single individual name, what their low of Friday was, and as soon as that level breaks, I'm comfortable going bearish because I know we see a break of support and further downside action, and I anticipate that because of the amount of momentum we saw on Friday, that a break of that low will see further significant momentum and a nice day trade at the very least. So as we see the open, I watch pre-market and we get prepared for the day during the first half hour or the last half hour until the open. And so we're seeing that these names are opening slightly above their low of the day. So if we see pullback right at the open and we see a break of that level, we know to go bearish. So here on Google, we broke that low of 953.37. And as soon as that level breaks, you can go bearish and set your stop loss level for a level you're comfortable losing and try and catch some of that downside move. Now, after I see that move, I'm looking at the shorter term time frames to get some more information, some more pieces of the puzzle. So looking on the hourly time frame first, heading into the morning, I can see, okay, the hourly RSI is still oversold. We have not bounced and cooled off. We rejected from exponential resistance at the end of the day Friday, and then here at as we headed into the open, the RSI was in the low 20s. And then we started with a bear break. So as soon as we broke the low Friday, we know we're already oversold. So I'm going to be quicker with my exit on this trade because I'm going to anticipate an oversold bounce in the near-term future. And the RSI on the hourly got down in close to the single digits. So that is very clearly an indication that we are going to see the bulls show up in the near-term future. So knowing that, I then look to the 5-minute time frame to time my exit. And I say, okay, first candlestick of the day, we break the low of Friday, and then we see a dump, and we see downside action. 5-minute RSI got down to 16. So if I've got the hourly RSI down in the low teens, I've got the 5-minute RSI in the mid-teens, I know, okay, an oversold bounce is coming. I'm taking my profit on my quick trade, little 10-15 minute trade, and then reassessing the situation. I can either call it there and take a step back and watch how it plays out, or I can flip right to going bullish for this oversold bounce that I would be very comfortable going in. And honestly, at this point, with the RSI on the hourly and the 5-minute time frame so extended in one direction to the downside, I do not even need a support level to be trading off of. I can just be looking at that RSI alone. If it were just the hourly or just the 5-minute RSI oversold, I wouldn't be as confident, but when they're both this significantly oversold, I would be confident looking for an oversold bounce. So I could either get in and just wait for the bounce to play out, or I could wait for exponential moving average to become support. And it became support, and then we saw about an hour of upside. So just a little bit of a glimpse into what I look at when I utilize all these different time frames. The daily, the hourly, and the 5-minute time frame are all very important levels that I'm referencing throughout the day and comparing. And again, it's for just the little pieces of the puzzle, low of Friday on the daily time frame was step number one for my indication. RSI on the hourly was the second note that I made, and then 5-minute RSI was the third note that I made that let me know to take profit bearish and even to potentially be looking bullish for a bounce. So the bounce didn't see a whole lot of momentum. Just to sum up where we head into tomorrow, this was not a convincing bounce in any way, shape, or form for me. We didn't even test the hourly 20-period moving average resistance. If we cannot get over this support level, turn this into support tomorrow, then that is going to indicate that the bears are in full control and we're likely to see another leg to the downside. So as far as I'm concerned at this point, the bulls have proven nothing, and this is an oversold bounce cooling off the hourly RSI from a level down in the low teens, and now here we are up in 41. So there's plenty of downside potential here. If we can't get over this hourly moving average resistance, we're looking down at this base here where we had our higher low of 950.57. That's a very important support. You can see that level on many individual names, and if that level breaks tomorrow, we know we're heading right back down towards the low of the day with very little support in between that level if it breaks and that low. So I appreciate you watching, And feel free to ask any other questions, and we'll check back in with a lot of other videos forever and ever.